Hi guys, this video today I'm making to help prevent you from losing too much money on a trading strategy. It's a mechanical trading strategy or an algorithmic, rule-based strategy. We're going to look into the performance report and show you some numbers that sometimes are overlooked. Now this particular strategy I'm going to show you an example of. It's one I found on the internet myself that on the outset looked really good. So what I've done is I've coded it on multi-charts, and we're going to look at the performance report and show you the numbers that sometimes are overlooked and can make a big difference between whether you're going to make a load of money or lose a load of money. The strategy I found, I'm not going to say where I found it or what it is. That's not really the purpose. The purpose isn't really to analyse this particular strategy. It's to show you what you should be looking at when you're looking at analysing any strategy really. So this one it's a day trading strategy, and it's supposed to work on all the major forex pairs. It uses 30-minute bars. The 30-minute bars, that's the trade setup, and the trades are closed at the end of that 30-minute bars, so never do the trades last more than 30 minutes. Like I said, I've coded it in multi-charts, and we're going to look at about 5 years worth of past data, so we're going to see how it performed over the past 5 years. And what I've done is I've used cable, or the Great British Pound versus the US dollar. I have checked it on other pairs as well, and yeah, the performance is similar across the other pairs. As a side note, the recommended stop loss that the guy that I found it, what he recommended, I haven't used that. I've used just a fixed, in this case, just a fixed 40 pip stop. In fact, the 40 pip stop does work better than what was recommended, so we're going to leave it just at that. Okay, so what we're looking at here is this strategy on the 30-minute bars. We're looking at the performance report from multi-charts, and quite clearly we can see this is the equity curve, both the long and the short trades. We can see it's a nice upward equity curve. We're making money. It goes back over 5 years, so to start down here back in 2012, and then it's made money, and then it's got even stronger. We've had a very, very slight dip recently, but overall we're making good money. So all is well. We could quite possibly want to trade this. But before we go any further, what we do is we have a look at another part of the report, which is the total trade analysis. This tells us some really important figures. Over the 5 years, where we've got a total of 6,700 trades. So it trades a lot. It trades really frequently. As I said, trades last only until the next 30-minute bar, so they're always under 30 minutes. We can see that by looking at the average time in trade. This is the average or number of bars in trade, 22.9. What I've done is I've coded this on a minute chart. So although the setup is on the 30-minute bar, to get the best definition I've used a minute chart. So that's why it's 22.9 bars or 22.9 minutes average trade duration. So the important figure I want you to look at here is this one, which is the average trade. What that is the time you've added up all your winnings and then you've taken away all the losers, you're going to get a figure. Divide that by the number of trades, the 6,700, and then that gives you a figure of what the average trade is worth to you. Now, what I've coded into multi-charts is I've said we want to trade one full lot, which is equivalent to 100,000 units. Now, with 100,000 units on cable, each pip is worth $10. So if we were to make 20 pips on a certain trade, that would be equivalent to $200 trading one full lot. So on this one, the average trade is actually $6.95. Right, what we do now is we'll go over to another strategy performance report where I've added in some costs, because we've got costs when we trade, and we can't just get in and out at the numbers that we see from the report or from the strategy. We have to pay things like transaction costs, spreads. So what I've done in the next performance report we're going to see is I've added in some costs into multi-charts. I've added in a really small, or a realistic cost of 2 pips per trade. So what that means is, for example, the spread, you might be paying 1 pip on the spread, and then transaction costs. So let me tell you that 2 pips is probably pretty low, or certainly realistic. With 2 pips worth of costs or fees per trade, I've already explained that we're trading 1 full lot here, and 1 pip is worth $10. So with 2 pips for every trade, that's $20 for every trade. So it doesn't take a genius to work out that if we've got a strategy with no costs here that's making $6.95 a trade before costs, by the time we've taken the costs out of that, we're going to have a minus number, and we could end up losing money. Well, we will end up losing money, and I'll show you that now as we go over to the other performance report where I've added that 2 pips worth of cost into the strategy. So there we go. That is the exact same strategy, and all I've done is I've added $20 worth, or 2 pips worth of costs into the strategy, and that's how drastically the equity curves can change something on a strategy like this. If we go into the total trade analysis again, you can see that whereas before we had an average trade of $6.95, now with the costs we've got an average trade of minus $12.91. Go back to that equity curve just to show really how real the impact of this small amount of costs can actually make on this sort of trading strategy. Well, there you go, guys. Now you've learned a really important statistic about when you're analysing a trading strategy. The importance of costs really do have a big impact on the performance, especially strategies shorter term like this one, where lasting 30 minutes. So when you're looking at strategies on the internet or in books, test them out for yourselves and include costs, because what can look really good at first glance may not be that great when you start adding costs. I hope you liked this video, and you can subscribe or like it, comment. If you have any mechanical trading strategies you want me to test, I can code them, we can test them, leave them below or send me a message, and I'll see you on the next video.